right, so I want people to start thinking about questions that you may have, so I'll open it up in a moment, but I'll ask one more question of the entire panel while people are thinking. So here's your chance to offer, what's the one thing that you would want a regulator to do with respect to fintech innovation, and what's the one thing you would not want a regulator to do? It's a very broad question, so you can be humorous or creative. Oh, I have to pick somebody first, don't I? Let's go, Alex. Here.
Thank you. So I have a lot more do's than I have don'ts. So that's my attempt at humor. But I think these are more U.S. focused comments. But in the U.S., one thing that would be awesome is if we could clarify the types of relationships between the existing incumbent financial institutions and the non-bank or the fintech quote unquote community. In the U.S., the nature of those relationships isn't entirely clear, and in terms of it's a long conversation, but basically, there's not a lot of clarity in some cases about how those two can work together, whether that's data sharing or the ability to issue loans and things like that. And those have been issues we've known about for a while that we haven't gotten as much clarity, I think, as the industry would like. So that's one. I think also in the U.S., to Kristen's point, there's so many regulators. I think collaboration on clear and consistent guidance, almost whatever that guidance is, would be awesome. Would also be another one on my wish list. And then just a quick plug for Daniel and CFTC. I think creating cultures of friendliness and openness towards innovation and dialogue with industry as well as other stakeholders is another one on my wish list. As far as the don'ts, I think it's pretty straightforward. I'll just say one, which is not jumping to conclusions too quickly about new technologies, and whether it's through sandboxes, whether it's through listening tours, just taking the time to fully kind of understand the effects that regulation might have on promising new technologies.
Great, and Jackson, do and don't do.
I'm going to make this an easy one. Work together. And I know that's a terrible answer because it's not very in-depth and it's very amateurish almost, but I think what we've seen, at least domestically, we have at least a dozen regulators at the federal level that have some foot in the door on fintech here, and that's not even including 50 state regulators in the U.S. So that's an issue that obviously is going to be a thorn in the side of a lot of fintech firms. It's very challenging for them to scale. Daniel talked about the borderless nature of fintech. Well, certainly this whole regulatory apparatus that we have right now doesn't really help. I would say on the international level, working together, hugely important. Frankly, I like this initiative, the Global Financial Innovation Network. I think getting regulators together, sharing information, enough of these bilateral treaties between one regulator and another regulator. I think having multiple regulators in the same room talking about something and really trying to get either some standards or just some understanding of what it is that's out there is incredibly important. So working together, obviously, a big do. As to don't, two things. One, I would say that avoid rigid rulemaking. And the reason and I'll provide an example here, when I was working with Daniel at the Milken Institute, when I first came on board, we were talking about the SEC's implementation of the Jobs Act, which included equity crowdfunding and a whole host of other provisions. But nonetheless, it took 3 years from the passage of that Jobs Act in 2012 to become fully implemented in 2015. And in the 4 years that I've been involved in fintech, things have changed dramatically. So from the time it takes the passage to the time it takes the actual implementation, things will change a lot. And so by the time that the SEC actually started implementing the Jobs Act, people were clamoring for changes almost immediately. The second thing I would encourage all of you to do is really look under the hood of fintech, right? Fintech is such a generalized term now. It could include anything and everything at this point. When we talk about insurtech, AI, blockchain, all these buzzwords, right? There are very different models under each of these buzzwords, right? And different operations, products, and services. To paint this whole, insurtech, regtech, what have you, with one kind of regulatory stroke is really going to affect the whole ecosystem and really crimp innovation in the end. So what our job and what we'll do for you is to try and understand what it is that's out there and come out with a number of reports. So.
All right, Kristen, do and don't.
So I would say do have informal conversations with industry as to what they're doing. Lab CFTC is a great example. SEC here, I think, copied you, Daniel, and started their FinHub. For founders of companies that might not have experience working with regulators, it's very intimidating to show up and have those meetings and those conversations. And if there is a more informal way to begin to engage, that I think goes a long ways and really helps the regulator understand what the industry is trying to do and where they're trying to going, and to have that dialogue early on in the process, I think is very useful. On the don't side, I would say don't immediately try to fit what you're looking at into an existing bucket. I think there will be many times when something you're looking at really is just a small improvement on something that's already regulated, but be open to the fact that maybe there is something new here and that it would require a potentially different approach in order to protect consumers.
Great. Okay, so let's open it up to questions. I have a few more if we don't have any, but I suspect that we'll have a few.
I have one for you guys. What do you feedback? Oh, sorry, try again. Okay, perfect. Thanks. What are you guys doing? What's going on in your jurisdiction? Maybe it's like we have on the bottom of there interactive participant discussion. So this is your chance. Let us know. What are you seeing? What are you folks doing? I know we got some countries out there that are definitely have sandboxes, have different innovative ideas. Love to get interactive. So if you got questions for our panel, great. But otherwise, please share what you guys are doing too. I'm gonna start picking on someone if they don't get anything.
Can I just say one thing? And this was during Daniel's discussion. There was a question, I believe, from one of you gentlemen talking about fintech and capital markets, right? And what's interesting about fintech and capital markets is, and I hate to use this word in the regular sort of discussion, but it's not really sexy, right? You're building an app, that gets $200 million, but you're trying to fix derivatives clearing. That's not really interesting. We're not really interested in it. BCG, Boston Consulting Group, did a study back in 2016. Their database back then had about 8,000 fintech firms in it from around the globe, right? 500 of them focused on the capital markets space, right? And very little deal flow in that area. And in fact, I think over the course of the last couple of years, there's been probably 3 to 4 billion at most, right? EY has done another great study. I'm happy to send them to you. But again, in 2017, fintech or funding for fintechs that are focused on capital markets fell by half, right? Despite everything else kind of shooting out of proportions, right? There just doesn't seem to be either interest or, and I'd be interested in hearing from you as well. But that's what I've seen on the capital market side, at least at this point.